Hey everybody, John here at this week's edition of Deep Dive, and I want to tell you I'm all alone today. It's always kind of scary and interesting both whenever they let me record on my own. There's some things that I don't get to do on my own anymore, which I really kind of miss, and I still cut up my own food, so that's a good thing. I still have time to be able to work with my chainsaw outside, even though sometimes I wonder if I should. And every now and then I get to do a deep dive by myself, and today I really wanted to kind of review True Wealth Live from the previous week. And, we were live in East Peoria, Illinois. We broadcast on our YouTube channel. And if you haven't had a chance to watch that, I encourage you to watch that. The thousands of views already on that broadcast. And it was a great time to be able to connect with everybody, connect online. And we're going to have a lot more events coming up, both online events that are live, and then also more events face to face coming up for the rest of the year. Make sure you check out information in the body of the email, but also pay attention to text messages, emails, and other social blasts that come out to make sure you're in touch with us at all times so you can kind of see what's going on. True Wealth Live, I really wanted to focus upon what's happened in the last year, what's happened so far in 2025, and then also where do we see things heading out. But more than just give you information, and a lot of times head knowledge is really important to have, but head knowledge without actionable steps, it does no benefit. It doesn't really help you out. And so we brought things down really to 3 to 4 action items for everybody to walk away with. And we wanted to make sure, first of all, we educate you, and then we encourage you, and then we empower you to action. And it's all about the goals that you have personally, and how do you survive and thrive during those periods of time to accomplish goals and to be in the best position possible. In 2024, we came off a time when artificial intelligence really drove the market higher. However, 58% of the total return in the S&P 500 was really comprised of 7 individual stocks. It was the Magnificent Seven. It was Apple. It was Nvidia, names like Microsoft, Google, and Tesla. And so really a small handful of names, technology names. But also the other thing is interesting, 35% of all stocks in the S&P 500, about 200 of them are actually negative for the year in 2024. And so we came to where a small area of leadership led the market higher. Matter of fact, if you took all 504 companies in the S&P 500 and you invested in them evenly, the actual rate of return was about 1/2 of what the S&P 500 was. And that speaks to there being an overvalued market. And we actually saw that. There's something called the Cape-Shiller Index, and that measures what the value of the stock market is. And what we saw actually at the end of 2024, it was the third most highest valued market in the history of the United States stock market. In February of 2020, it was a little bit higher, and we saw the market drop 37% in 1 month. In December of 1999 was actually the highest valued market after the big tech boom. It went to a bust. We had 3 years in a row of the stock market being negative. The fourth highest time as far as evaluation in the market history is December of 1929. We saw the great crash after that. It took actually close to 20 years to get back to where the markets were in December of 1929. So whenever the market's overvalued, as we saw, it creates what's called a bubble. And we saw that at the end of last year. All it takes is a singular event. So in 2020, the singular event was actually a cough. It was COVID, and that caused the market to drop off. And in 1999, we had the tech boom, but then it went to a recession. And then what happened after that? We had 9/11. That caused the 3 years in a row of negative return in a recession that lasted close to 30 months. Right now we're saying what caused the latest pullback in the market. So we know from the high on February 18th until the low about a week ago, the market S&P 500 as measured the market actually dropped right at 20%. And a 20% pullback from a high is actually called a bear market. Well, now it's only a bear market for 1 day, and then it kind of started coming back. We're still down about 10% year to date. But what caused that? Well, we had a new president take his second term, and there was a gap of 4 years between the first term and second term. And President Trump came into office, and he had a very aggressive first 100-day plan. There's 3 primary areas he's really focusing on. Really, 2 had to do with security of the country. And the third area, though, had to do with American exceptionalism. And it had to do with making sure our trade partners were treating the United States of America fairly, from his definition. And he used a blunt tool, a blunt instrument called a tariff to try to get people to come to the negotiating table and really bring about fair trade. In doing that, he put 10% tariffs on pretty much all countries of the world, for the most part. There's some that are not included there, that according to his calculations and his administration's calculations are working in a fair way of trade. Canada and Mexico were put in 25% tariffs. And right now, China is up to 154% in tariffs. China also reciprocated with 125% in tariffs to the United States. Well, a tariff, it's a blunt instrument. It does have significant impact long term, but it does cause the market to pull back in the short term. Remember, folks, what the market likes is certainty. What the current tariff, I'll say tariff administration is doing is they're creating uncertainty. And with that uncertainty, it's creating a lot of confusion in the market, and we're not sure what to do. We also know that companies are cutting back on their CapEx spending, and they're cutting back on their investment in human capital or employees. They're also cutting back as far as on research and development. These are all things that drive the economy. And so it's a real concern the U.S. economy is going to go from a projected 2.7% growth rate in 2025 down to current projection of 1.8%. That's a significant decrease just in the first quarter of this year. That all comes out from the uncertainty. So Trump and then tariffs, and the next one's taxes. We know that the tax code that was passed in 2017 is set to expire at the end of this year. Not quite certain if that's going to be extended or changed in some way. But the uncertainty from that is causing corporations to really delay decisions on what they're going to do with their companies. But it's also caused a lot of individuals to kind of be paralyzed on what to do. All of this is creating a lot of turmoil. We actually received some comments from a number of clients trying to figure out, do I delay my retirement? Do I not? It's causing a lot of folks to ask questions about, are they properly aligned in their portfolios? But even when I'm being interviewed around the world, that's the top question that comes up. What are people to do with their investment decisions? And so it's interesting to see how all of these three T's is driving to the fourth T, which is turmoil. At the end of it all, though, there's four other T's, or three other T's that you can really focus on. The first one's time. And oftentimes we hear that really if the market goes down, don't worry about the stock market always goes up when it goes to the right. And we know historically, if your time frame is 20 or 30 years, that does generally hold true. But there are long periods of time. We saw from 2000 to 2010 where the stock market went nowhere. Every 15, 20 years, we see a long period of time of 3 to 10 years where the stock market's flat. So if the time frame that you're looking before you're going to access the money is less than 20 years, you really want to consider your portfolio. And make sure you have proper alignment with the time you're going to need the money to how the money's invested. The second thing with time, Ray Dalio, who is a hedge fund manager that we follow quite extensively, did say that the holy grail of investing is to have 12 to 15 non-correlated assets that are not tied to the stock market. You know, we saw that the tried and true 60-40 portfolio blew up in 2022. Stock market down 19% and bonds down 16%. And so if that was your diversification, you really got whopped upside the head in both ways. And so we are working with a couple of different firms on bringing out high-performing portfolios that are not tied to the stock market, that really don't experience volatility, but still give you a quality rate of return. So first one's time, next one's temperament, two core emotions, fear and greed. And we don't want to be operating and making financial decisions based upon either one. What you really want to make sure you're doing right now to make sure you make investment decisions and cash flow decisions that are based upon facts is you would have understanding of how much risk you actually have in your portfolio. So with all the accounts that Creekmur Wealth manages for our clients, we have things dialed in from a statistical standpoint to say what is the actual risk, and then what can you expect from volatility based upon different market environments. If you have accounts in a 401k, 403, 457 plan, or even inside an investment account that's not managed by Creekmur Wealth, we would love to give you a second opinion of the level of risk in those accounts and what are some adjustments that you can make along the way to decrease the risk. So time, temperament. Number three is talent, and talent in two areas. The first one is taxes. And as a lot of you know, we did purchase a number of different companies in the last year, one of which was a tax planning firm. And then with that, we now are offering the ability for us to take your 2024 taxes and actually run them through an analysis to determine, can you decrease your taxes? There's over 120 different strategies that might make sense. And you find for most people, 3 to 7 of them do apply to you uniquely. And so we'd love to be able to do that for you. The cost on that's $300. And we do have a guarantee that we will make sure you find at least $300 in savings, or else we'll refund the money back for you. And so really encourage you to take advantage of that and let us run a tax analysis for you. And last but not least is technical. And that is having talent and understanding and listening to the markets and understanding why it's moving and what direction it's moving. In basketball, if you make a move, it's a change of direction and or a change of pace. And when you look at the stock market, you're looking for the exact same thing, a change in direction and movement, and also a change in momentum. Well, that's something that we specialize in, that a lot of folks have been asking, how did you get it so right in knowing what the markets were going to do? It's because of the analysis. And so, folks, I want to encourage you to take advantage of the services we're providing with you all. Number one is just the partnering with our different firms on putting together a specialty high net worth suite of services that are available uniquely to our clients. And you can definitely click on the link below or use the QR code to be able to get signed up for this specialty investing newsletter that we have coming out here in the month of May. Also, make sure any accounts you have that we have not run a risk analysis on, that we run it for you. Number three is to make sure that you have a good understanding of your taxes and take advantage of the tax analysis for $300. And then last but not least is we're going to make sure you have an understanding of technical movements and how the market's moving. Folks, there's so many resources put together for you. A lot of folks aren't aware of all of them. And right now, I'd encourage you to really make sure you follow and listen to the True Wealth Live presentation, going into much more detail than I did today, but really take advantage of those 4 offers we have available for you. And guys, it's such an honor and a privilege to work with you all every single day. And I really want to make sure you guys have the head knowledge to make wise, informed decisions that help you accomplish your goals. Anyway, guys, Drew will be back next week. And until then, I'll chat with you guys later. Bye-bye.